Trading 212 is a powerhouse in the UK investing scene, and they're known for their low fees, great investment selection, and easy to use app. This makes it a great platform for all types of investors, including beginners. I myself was a complete beginner when I opened my Trading 212 account 6 years ago, and early on I made a number of rookie errors. So in this video, I'm going to share exactly the mistakes I made and the things I wish I knew when I began my investing journey. Hopefully, this will be useful to those who are thinking about opening a Trading 212 account and those who have already started their Trading 212 journey. If you're new here, I'm Finch, a management consultant by day, and on this channel we like to discuss all things personal finance with particular focus on how to grow your money. If you'd like to follow my own personal finance journey, including my journey towards a 100k ISA portfolio, then I greatly appreciate you subscribe. But for this video, let's get into it and start with the first mistake. When I began my investing journey, the first mistake I made was following the herd and listening to all the noise. Trading 212 has great community features through pies and basically everything on the social tab in the app. But through this, I got caught in a trap in copying and following others instead of doing my own research and making my own decisions. I copied others' pies and invested in companies like Palantir just because everyone else was and everyone was saying it's going to the moon. I didn't do any of my own research and I regret this, as a lot of the companies I invested in at the start of my investing journey didn't do well. Since then, I've learned from this experience and I now research thoroughly whatever I invest in so I understand the investment and the risks. I'm making my own decision to invest in something rather than just following what others are doing. The second mistake I made was thinking short term and trying to make a quick buck. When I began my investing journey, I thought I could find hidden gems and essentially buy low and sell high, make a bunch of money through trading. Trading 212 has a host of great trading features like 24/5 trading, different order types, a bunch of research. They have different and detailed graphs, and all of this makes trading really easy to do. But it doesn't necessarily mean that you'll be successful and make money through trading. Unless you're an experienced trader and really know what you're doing, it's incredibly hard to make money through trading, as you're essentially trying to time the market, and the market is unpredictable in the short term. I was definitely in the bucket of not knowing what I was doing, and I lost money in the short term because I didn't know what I was doing. Since this experience, I've changed my investing strategy from attempting to trade in the short term with individual stocks to thinking long term and investing in long term focused funds, ETFs. The third mistake I made was panic selling. Because I was so focused on the short term, when the market did have a crash or just a fairly big fall, I was very quick to hit that sell button in the fear that the value of my investments could go even lower. This was the wrong strategy for me because all I was doing was crystallizing my losses and missing out on the potential of a recovery. Much research has shown that the market's best days tend to follow its worst days. So for me, by selling at a low point in the market on a bad day, all I was doing was forfeiting the opportunity to be in the market on a good day and claw back my losses and even make a profit. Now I've changed my investing strategy. My investing strategy is focused on the long term, not the short term, and my strategy is unemotional compared to previously where it was very emotionally driven. What I mean by this is that if the market does have a bad day, it doesn't panic me. Instead, I just follow and carry on with my long-term investing strategy of depositing into my portfolio of chosen ETFs every month. I don't have any temptation to sell. I learned the hard way that in the short term, the market is volatile. It goes up and down a lot. And part of being an investor and investing is just accepting that. What's more important to me now is staying invested for the long term, as historically the market tends to do well over the long term. If the market is having a bad period, a bad few days, and I am tempted to go back into that short-term thinking mindset, then what I do is I just bring up a picture of the S&P 500 over the past 50 years, as this reminds me of the big picture and makes me realize what may seem a huge fall and the biggest market crash ever at the time is probably just a tiny dip in an otherwise long-term journey upwards. The fourth and final big mistake I made early on in my investing journey was picking a portfolio which really lacked diversification. Trading 212 has a huge selection of stocks, of funds, and many other investments. But it's super easy to just pick a small portfolio of stocks and place all your bets in them. That's exactly what I did early on. I picked and invested in around 10 to 15 stocks, and I thought that that was a well-diversified portfolio. But in reality, it wasn't diversified at all, as all those stocks were American companies, and they were only within a couple of sectors. They were either in the general tech sector or in health tech. So this meant that if one of those sectors had a bad month, or the American stock market had a bad month, I was fully exposed and my whole portfolio would go down. This was a very high risk strategy, as I was placing all my bets on one country and a couple of sectors. Now, to smooth out my investing experience, I aim for high diversification. Diversification across sectors, across company sizes, and across countries. And through this approach, I may not experience as big gains if one specific sector or country does well, but I also won't experience as big losses if one country or sector doesn't do well. Instead, I'm placing my bets on the entire market, so I have a smoother investing experience, as if one sector doesn't do well, I have others to fall back on. To achieve this level of diversification, I invest in long-term focused ETFs. I invest in 4 specific ETFs, 3 which are globally diversified ETFs, and a 4th ETF which is invested in gold to provide another asset for diversification. So I've moved away from stock picking towards fund-focused, long-term focused investing. I've also moved the majority of my funds from Trading 212 to another platform in InvestEngine, and you can check out my InvestEngine portfolio around here. But for this video, that's the 4 mistakes I made early on and the things I wish I knew when I began my investing journey. I hope it's useful for you, and if there's any mistakes you've made early in your investing journey, put them in the comments, as I'm sure it will help many others. Thank you for watching this video.